Have you ever wondered why gold and silver prices seem to move when the economy is in chaos? Today, we're going to break it all down in a way that's easy to understand. Welcome to Gold Silver Scope, where we take a deep dive into precious metals and the forces that shape their value. Lately, there's been a lot happening in the world economy that affects your investments in gold and silver. Oil prices, for example, are starting to climb higher, and that's going to have a ripple effect across the markets. When energy prices rise, it costs more for businesses to operate, for factories to produce goods, and for families to fill their gas tanks. That pressure often pushes inflation higher, and when inflation rises, gold and silver usually become more attractive as a safe store of value. The US dollar is also showing signs of weakness. This is important because the value of the dollar directly influences the price of gold and silver. When the dollar weakens, precious metals tend to go up. Why? Because it takes more dollars to buy the same ounce of gold or silver, making them more valuable in dollar terms. Central banks around the world have already noticed this trend. They're slowly selling off dollars and buying gold, signaling that they expect the dollar to lose value over time. The U.S. national debt is another key factor. The debt recently surpassed $38.7 trillion, climbing rapidly in just over a year. Rising debt means the government will need to borrow more money, which often leads to higher interest rates. Higher interest rates put pressure on other parts of the economy, like housing and consumer spending. When the economy slows down because of these pressures, investors often turn to gold and silver as a safe haven. Another element to watch is the trade deficit. As the dollar weakens, imports become more expensive. Even if exports increase slightly, the overall trade deficit may grow, adding more strain to the economy. These twin deficits, budget and trade, create a scenario where precious metals can shine. When traditional currency loses purchasing power, people seek alternatives like gold and silver to protect their wealth. In summary, higher oil prices, rising national debt, weakening currency, and growing trade deficits all point to a potentially stronger demand for gold and silver. If you want to stay ahead of these changes and understand how global events affect your investments in precious metals, this is exactly where you need to be, right here at Gold Silver Scope. Now that we've set the stage with oil prices, the national debt, and the weakening dollar, let's dive deeper into how all these factors affect gold and silver. When the dollar loses value, it doesn't just influence prices at the gas pump. It ripples through the entire economy. Everyday goods, from groceries to electronics, become more expensive. This is classic inflation, and historically, gold and silver perform well in these situations. Investors look for assets that hold their value, and that's where precious metals come in. They are not tied directly to any single government's currency, so they act as a shield against inflation. The U.S. budget deficit is another major concern. Spending continues to rise, and with more borrowing, interest payments on the debt increase. Higher debt and higher interest rates can slow down economic growth. This slowdown affects stocks and bonds, but gold and silver often move in the opposite direction. While other investments may lose value during these periods, precious metals usually retain or even increase their value. For people looking to protect their wealth, this is a key reason to pay attention to gold and silver. Oil prices are also a hidden driver of precious metals. Rising oil costs make transportation and production more expensive. Higher costs get passed on to consumers, which raises inflation even more. In this environment, silver often reacts faster than gold because it is used in both industry and investment. Industrial demand adds an extra layer of support for silver prices when costs for businesses rise. Another factor is the behavior of global central banks. They can sense when a currency is losing strength and act accordingly. Many central banks are reducing their dollar holdings and increasing their gold reserves. This global shift is not random. It signals that major economies are preparing for potential instability in the dollar. When central banks buy gold, it supports the price and often signals that investors should consider doing the same. Finally, we have the housing market as an indicator. Expensive homes and rising mortgage rates are signs of economic stress. When traditional investments become less attractive or riskier, people look for safe haven assets. Gold and silver are historically reliable in these conditions. They are tangible assets that don't rely on the economy functioning perfectly. They hold value even when other markets falter. All these factors, the weak dollar, rising debt, higher oil prices, and economic stress, create a perfect storm for precious metals. For investors, it's crucial to watch these trends closely because they indicate when gold and silver could rise sharply. These metals often act as a hedge, protecting against uncertainty and inflation while other markets struggle. Now, let's take a closer look at some real economic trends that could push gold and silver prices higher in the coming months. Understanding these trends can help you make smarter decisions as an investor. First, consider inflation. Inflation happens when the cost of goods and services goes up. Right now, the combination of higher oil prices, a weakening dollar, and continued government spending is creating inflationary pressure. When inflation rises, the purchasing power of cash falls. That means each dollar you hold buys less over time. In these situations, gold and silver are valuable because they don't lose their worth the same way cash does. In fact, investors often flock to precious metals as a safe haven when inflation is rising. Next, the U.S. budget and trade deficits, sometimes called the twin deficits, are critical to watch. When the government spends more than it earns, it borrows money, increasing the national debt. A larger debt means higher interest payments, which can slow the economy. At the same time, the trade deficit grows when the country imports more than it exports, putting more downward pressure on the dollar. When the dollar weakens, gold and silver prices typically rise because it takes more dollars to buy the same amount of metal. The housing market is another economic signal for precious metals. Recently, home sales have dropped to record lows. This isn't just a problem for home buyers, it reflects broader economic stress. When mortgages are expensive and homes are overpriced, people have less money to spend on other things, slowing down economic growth. In uncertain times like this, gold and silver become more attractive as safe investments. They aren't tied to the stock market or housing prices, so they often outperform when other markets struggle. We should also consider central banks and global investors. When they start buying gold and reducing dollar holdings, it's a clear sign they are concerned about the dollar's future. Their actions create demand for gold, which supports higher prices. Silver benefits too, especially because it has industrial uses. Increased industrial demand combined with investment demand can push silver prices even higher. Finally, think about interest rates. When rates rise, borrowing becomes more expensive, slowing down spending and investment. This can hurt stocks and bonds, but gold and silver often respond differently. Even in a high-interest environment, metals hold their value because they are tangible assets. They don't pay interest, but they do provide security during uncertain times. By keeping an eye on these economic indicators, inflation, deficits, housing trends, central bank activity, and interest rates, you can better understand when gold and silver may see upward momentum. These trends are all connected, creating an environment where precious metals can protect wealth and even grow in value while other investments may struggle. As we continue, it's important to think about what could happen next in the economy and how that might affect gold and silver prices. Understanding these risks and opportunities can help investors make better decisions. One major risk is the continued rise of government debt. With the U.S. national debt now over $38 trillion, every year adds more interest payments. If the government keeps spending without cutting back, it could lead to higher inflation and a weaker dollar. Both of these scenarios usually benefit gold and silver because they act as protection against the declining value of cash. Another key factor is global uncertainty. Conflicts, political instability, or even changes in trade policies can make traditional investments like stocks and bonds more volatile. When markets become unpredictable, investors often turn to gold and silver. These metals have been trusted for centuries as safe stores of value, so when people see risk in other investments, they buy more of them. Oil and energy prices remain another pressure point. When energy costs rise, it affects production, shipping, and everyday expenses. Higher costs push inflation higher, and inflation is one of the main reasons people invest in gold and silver. This is especially true for silver, which is used both in industry and investment. Industrial demand can give silver extra support when prices are under pressure. Interest rates and the housing market also play a role. Higher interest rates can slow the economy, while expensive homes and declining sales signal stress in the financial system. In these conditions, investors often look for assets that are less affected by loans and mortgages, like gold and silver. Even if other markets struggle, these metals often maintain or increase their value. Timing is another important aspect. Watching trends in deficits, inflation, and central bank behavior can give clues about when to enter or exit positions in gold and silver. For example, when inflation spikes and the dollar weakens, it could be an ideal time to increase exposure to these metals. Similarly, when central banks are actively buying gold, it can indicate strong support for higher prices. Overall, the combination of government debt, inflation, energy costs, market volatility, and central bank activity creates a scenario where gold and silver can play a crucial role in protecting wealth. Investors who understand these pressures and pay attention to economic trends are better positioned to take advantage of opportunities when markets become uncertain. Now that we've explored how debt, inflation, energy prices, trade deficits, and market volatility all impact gold and silver, it's time to think about what this means for you as an investor. The economic trends we've discussed aren't just numbers. They directly affect your purchasing power and the value of your savings. Protecting your wealth starts with understanding these trends and acting wisely. Gold and silver have historically been reliable stores of value during uncertain times. When currencies weaken, inflation rises, or markets become unstable, these metals often outperform other investments. By keeping a portion of your portfolio in gold and silver, you're adding a layer of security against economic shocks. This doesn't just preserve wealth, it can also create growth opportunities when prices move higher. Timing matters too. Watch for signals like rising inflation, central bank purchases of gold, a weakening dollar, or spikes in energy costs. These indicators often precede upward moves in precious metals. Being aware of these trends can help you make better decisions about when to buy or increase your holdings in gold and silver. If you want to stay ahead of these economic shifts, learn how to protect and grow your investments, and get insights you won't hear anywhere else, make sure you follow Gold Silver Scope. Here we break down the complex world of precious metals into clear, actionable insights that anyone can understand.